Hi everybody, good afternoon. Thank you so much for joining us for our webinar today. We're really excited to bring you today's speakers and topic, especially as it's quite timely with the announcement of the Future Fund. So I'm just going to run you through a little bit of the intro, and then I'll hand it over to Asma, who will be the host for the talk and introduce the speakers and so forth. So yeah, we've actually run a few of these webinars so far, and we're quite excited to continue to bring a series like this. The platform we're using has a really unique networking feature to it, which we think even post-lockdown and social distancing is just going to become another tool people have to have in their belt. Online networking is just going to keep growing. And we think there's a good opportunity there to bring a sort of unique approach to it. So we'll tell you a little bit more about that later. I'll give you a quick introduction. My name's Ben. I head up the sort of business development for Centuro Global. Really quick introduction for Centuro Global. We're a business growth management firm. We're here to equip entrepreneurs, global businesses, and investors with the tools, services, and the connections you really need to do business, basically. So we're highly skilled in international expansion, company setup, new market entry, as well as sort of global immigration and global talent visas, investor visas, etc. So if we can't help you directly, we also have a network of VCs, partners, and businesses that we can sort of connect you with. So really, if you're looking to grow your business, survive through this time, and then come out the other end stronger than ever, we're sort of here. So please feel free to have a chat with us in the networking, or reach out to us afterwards. So I'll introduce Asma, if you don't mind joining me. Asma will be the host for today. She'll jump in and take you through our speakers and the topic for the day.
Great, thank you very much.
Thanks very much.
Okay, thank you very much, and I'd like to welcome everyone for joining. And as Ben said, my name's Asma. I head up Centuro Global here. I'd like to welcome our speakers today. So firstly, I'd like to welcome Henry Warwood, well-known industry expert, and very passionate about sort of early stage business finance and high growth companies. He works at Bowhurst and probably known to many of the attendees here today. So Henry, please do join me. I think you just have to unmute your mic and camera, and hopefully that will allow you to come in. And then I will also introduce you to Philip. Philip Salter is the founder of the Entrepreneurs Network. He is a journalist by background, having worked with City AM and Forbes magazine. He now works on a number of initiatives, lobbying government on many campaigns, and one of the campaigns has been Save Our Startups. And both he and Henry have contributed towards the introduction of the Future Fund, which was announced on Monday, and which we will talk about hopefully during the webinar. So again, welcome to our speakers. So today's session is really going to focus on the impact the current pandemic is having on the startup ecosystem. And we've had so many questions from people, from startups particularly, talking about what companies are doing, what other startups are doing in this current crisis and how they're managing. And I think real life examples or areas where they feel they can actually take tips from are going to be very helpful. So I read some really startling statistics the other day, having read a couple of articles, and it's not just the actual business community that's suffering. So for example, if we've gone through this coronavirus, it's, if people are running out of cash or investments running out, or they're facing difficulties and challenges, it's not just a business problem. It's actually a societal problem. We see that obviously jobs are impacted, households are impacted, and therefore it becomes quite a wider problem. And with people employing millions in this particular industry or sector. So before we get to the initiative of the Future Fund and what that will do, I'd just like to discuss and debate the problems companies are currently facing right now. So Henry, if I may come to you first, you track under Bowhurst thousands of companies, their activity, their investment, their business models. So what have you seen over the last few weeks? I mean, what kind of disruption are companies facing? And do you have any, obviously without names, any examples of what companies are doing, or how are they managing to survive and thrive in this climate?
Good afternoon. Sorry, I've got a bit. I would start by dividing the effects into primary and secondary. So there are the direct effects of coronavirus, and in particular, the lockdown that we are seeing on these businesses. Now that impact is obviously distributed differently across sectors. And indeed, we are seeing some companies positively impacted. So we've recently completed an exercise to look at all of the 30,000 high growth companies in the UK that we track, and look at the nature and the severity of coronavirus's impact on their business, and that's the direct impact on their businesses. So we've been looking at, and these will vary from sector to sector, but we look at the companies that are experiencing increased lead times, companies that are experiencing surge in demand, companies that are having to lay off staff, not just furlough them, but lay them off completely, and all sorts of things like that. And we've been building up a classification rating of sort of critical through to potentially positive on those. So those are the sort of primary ones that I can talk about in more depth. And then it's probably useful at this point, and this will lead on to talking about the future fund, of the sort of secondary effects where businesses are experiencing problems because changes in the market, particularly the fundraising market, which have been caused by the uncertainty, economic upheaval, if you like, we're in is causing. So those are sort of the two categories.
Okay. And so obviously, so from these categories, I mean, are you able to sort of dig sort of deeper into maybe some examples of what challenges companies are facing and how are they overcoming them? So some of the biggest questions that I get, or most frequent questions that we get, are around, you know, what the practical solutions that companies are dealing with. So whilst the government's announced many initiatives, and obviously in the last 3 weeks, people have now come to a stage where they've looked at the furloughing, they've looked at the civils, they've looked at all the grants options that there are. But what can companies do? I mean, there are many, especially the startup. Obviously, this fund is only just coming on Monday. We still don't know what the finer detail is and when that's going to sort of be released. I mean, they're saying it will start from May, but at the same time, companies are facing hardship now. They are facing difficulties now. So beyond this sort of appetite for investment and all the things, the uncertainty that's going on in the marketplace, what can we offer as perhaps examples, or maybe even practical solutions or tips to companies? What should they be thinking about to survive? Because we know, I mean, I will go into later, other areas of what companies can do. But I think just to start this off, the biggest problem that I've got, I mean, we did a survey just before this webinar, and we've had, I would say, probably 75% of the people that responded, their biggest question was, how do we generate income right now, and how do we survive? So what are companies, what companies are doing it well?
I'm sure. So sort of going back to our data a little, obviously I mentioned the sectoral discrepancies. You also see discrepancies by stage as well. So the problem is sort of three-dimensional from that point of view. We've actually seen that the earliest stage businesses are least impacted. And there are probably two reasons for that. One is the sectoral biases. The youngest companies are typically more tech-led. They are more able to carry on doing what they were doing remotely. They're less reliant on headcount and personnel from that point of view. And also because of their size, they can adjust more rapidly. If you are a smaller company and you defer the 3 hires you were looking to make this month, that has a meaningful impact on the amount of runway you have. Whereas once your employee count is much higher and your costs in that regard are a bit more set, for larger companies, that's where it becomes more difficult. And then you therefore look at schemes like the furloughing scheme.
Yeah. Okay, great, thank you. So Philip, just following on from that then, so you've obviously been involved with the Save Our Startup campaign as well, and I guess there must have been a lead up to that. So what have you been seeing in your network? What have been people saying to you, and what are the challenges that they've been facing?
So in terms of the Save Our Startup campaign, I suppose that came about because there were a lot of different voices talking to Treasury about a lot of different things, and I think the feedback from Treasury was that there was too much noise and not enough kind of clarity from people. The Save Our Startup campaign was purposely broad, so it did have the model of something like the Future Fund within it, but it also has recommendations around speeding up delivery of grants and R&D tax credits, and also potentially looking at things around tax breaks like SCIS, EIS, and VCT levels. So it's not just, it's not a kind of blueprint, I suppose, would be fair to say, even though it's obviously pretty influential on what's been decided. And obviously we'll come on to more of that given all the questions on that. In terms of our position in general and the views of the entrepreneurs in our network, so we have a network of kind of over 10,000 entrepreneurs who kind of receive our information, and they're kind of biased towards tech and biased towards high growth because that's kind of the things that we're interested in. And I'd say they're probably more adaptable than the average business. So we've definitely got a sense that people are being very proactive within our community, at least the ones that are reaching out. Their biggest challenges is highlighted by all the questions, is actually what are the kind of details of these policies, and how can they access the cash? And we've seen that obviously with Sybil's, and the access to the loans has been far from ideal. I think the furloughing seems to have been, at least so far, has worked better. The system kind of held up under scrutiny, and that seems to be working better. I think so at the start, I think we were quite early in saying, recognizing the potential risk of this from a public health perspective, not because we're brilliant or anything, but just because we followed people who really did kind of pointed out early that this could be a big risk. So we're supportive of the lockdown, as in we understand the lockdown. I think where the government needs to be now is giving businesses not necessarily a time frame, because obviously that's all driven by public health, but actually a sense of what the processes are going to be for opening up the economy once the things are in place for that to happen. I suppose that's the critical point that other countries now are doing and the UK isn't doing. Just to say, once we have once we're in this position, then these industries will be coming back. We'll be able to work. We'll be kind of back online and won't be. And then I think business owners will be not in a position to plan perfectly, but be able to plan a little bit better. So I think that the problem is the time frame. If we knew that this was going to be over in a month, 3 months, 6 months, 12 months, changes the whole kind of scenario planning. But obviously we don't know that, but we should know a little bit more about once we get to a stage of knowing roughly that, like what it could look like.
Great. No, that's really helpful. And I think just picking up on both your points of uncertainty, and I think uncertainty is the biggest question we've got right now, because no one really knows what's going to happen in the future. And the government obviously isn't giving any clarity on what the exit strategy might look like. So we've had this obviously for a number of years with Brexit as well. The last 3 years, in the investor scene, in the startup scene, and I was at the TLA event in November last year. And a lot of the questions around some of the big investors, when they're sitting there, I talk to a lot of investors all the time, and over the past 12 months, many have come back and said to me, there's uncertainty. We don't know what's happening with Brexit. So yes, there is money, but we don't know, what the future holds. So we are waiting, and we are going to see how we're going to invest. And that uncertainty obviously was quite difficult for some companies because cash was needed at that time. Now we've come out of Brexit in January, where a decision was made, and then we've hit with this crisis. And now investors are doing the same thing. They're saying, well, it's a period of uncertainty. We're holding back. We don't know what's going to happen in the future. I've seen a lot of them pivot their directions, acquisitions rather than investment directly into startup companies. So Henry, I'd just like to ask again, I'm seeing lots of reports coming out of your platform where we're seeing lots of companies are securing investment right now, and they've been successful in doing so. But generally, what does the investment scene look like? And if those companies who are managing to succeed, what is different about them, and how are they doing it?
So there are parallels with what we saw with Brexit, and then there are obviously key differences. I think sort of generally, and with regards to fundraising, the main difference with this pandemic is how quickly it forced investors to slam the brakes on. We sort of entered an increasing period of uncertainty with Brexit, and then sort of slowly came out of it. Whereas we entered a period of really extreme uncertainty very quickly with this. So that's what we saw, is we saw basically the investment levels fall off a cliff. As nearly every investor, apart from completing a few deals that were so close to the line that there was no sense in not, we saw everyone sort of take a step back, and this is from individual angels all the way through to VCs and beyond. You had to stop and think, what's our strategy here? And we did see then some delays because you wait a day and there's more news and you feel like you have more clarity, although there is, as Philip points out, the key bits of clarity are not yet forthcoming from the government. So that is sort of felt like bad news as we sort of fell off the cliff. But in some ways now where we are, it's good news, because that was the trough. Basically, it had nowhere to go lower than that. And actually, we're seeing things pick up again recently, and it's partly just deals that were sort of deferred and put on hold whilst people figured out their strategies, and partly just new deals are being done. They're fewer than before, much fewer than before, but they are picking up again. So we've had the low point. I think is possibly, if you really want to dig for the positive spin, but it's going to be a long time before we're back up at pre-coronavirus fundraising levels. But deals are happening.
Okay. Yeah, I mean, that's very positive, because I have seen some of the data come through, and when you're looking, and it's quite encouraging to see that there are companies that are still securing investment. And personally, when I've spoken to both with angel investors, I've spoken to VCs, I mean, I have a huge network that I talk to. A lot of them have put a stop to the activity that they're undertaking. And I think a lot of the investors are coming back and saying, well, if you've got a business that is dealing with the impact of COVID-19, then yes, we will look at it. And then otherwise, everything else seems to, because I guess with the oil price having hit negative and all the other things that are happening around the economy, the issue that we've got is, what is the damage after COVID-19? What does that look like? Will demand still be there for certain services and certain products? I mean, even if people were building tech products right now, are they actually going to be something that the market's going to need? Because we're not going to be the same as we used to. So there's a lot that we need to look at. So Philip, again, coming to you. So in your network, you've obviously got more than 10,000 companies. Again, is this the investor scene? I mean, is this a topic that comes up? And if it does, I mean, what are people saying to you?
It kind of depends where people are in their business. I mean, the people that have got in touch, I suppose, are people who just, by bad luck, like entrepreneurs at the kind of end of their runway, let's say, if they're kind of equity backed. So the timing has just been very bad for them, and they were looking to fundraise. It's fallen through, or it's falling through, and then they're just in a kind of a particularly weak position. There are obviously other companies who are fine and have raised relatively recently and can just cut costs and try to weather the storm. So I think it's very much a kind of individual kind of basis as to kind of where they are in their business cycle, Henry's kind of observation earlier, kind of backed by the data, is something that anecdotally we've kind of seen as well, which is the smaller ones are kind of almost hibernating. Some of the companies, some of them are the directors have kind of furloughed themselves, and they're just, it's not an ideal situation for them, obviously, but they found a way to kind of keep going, at least personally, financially, and then to wait until things clear up. But it might be that they never start their company again as well. I mean, there's no getting away from the fact that if this goes on for too long, they'll their kind of desire to be an entrepreneur might kind of flounder within this. And if they can find other employment in one of these areas that's growing, they might well switch to something a little bit safer, because it's definitely not a time where entrepreneurs is the best place to be. It's probably better to be working for a large tech company or something like that rather than starting your own. So that's just the reality of this current climate.
Yeah, no, it's interesting, because I mean, we have been through these types. Well, I guess not a pandemic like this. I mean, this is obviously on another level. But we had the 2008 crash, and we had similar situations where, well, not every business was closed down. I mean, the way that around the world at the moment. But the financial crisis did have a huge impact on people's livelihoods, on large corporates, on what happened. But businesses did pivot, they did redirect, and they did try and change. And a lot of companies at that time, whether they were smaller, they did survive. So I guess there are lessons learned to be learned from there, that we do get through these situations as well. So it's not all doom and gloom. There are positive sides to it. So just kind of moving on then to the real kind of crux of today's discussion is the Future Fund. Right, so I mean, I think it's quite a welcoming initiative that's been introduced by the Chancellor. I mean, there's still sort of some gaps there, I think, that I see for myself, but hugely welcome in the fact that, it's opened up opportunities for a number of companies. So Henry, could you tell us a little bit more about the Future Fund?
I'll try and do my best. Obviously, it's not our fund. So the Future Fund is a co-investment vehicle by the government to match fund private investment into private companies via a convertible note. So it's 50-50 matched for ticket sizes from 250,000 to 1.5 million. I think I'm right in saying. Philip can correct me if I'm wrong. And it's a convertible note, so it's done as debt that will convert at the next eligible round. So that provides some ease with regards to not having to sort of figure out valuations under duress and things like that. The company does have the option to repay, but there is a penalty for that. So it's very much designed as an equity instrument, with the convertibility being to ease the practicalities in the short term, rather than for it to be viewed as a debt instrument.
Okay, and it's an interesting concept, because what the government is saying is that we will invest in you if you can find a private investor. So basically co-invest with someone else, and you've got to have had investment in the past as well. So that leads me to think that this is really going to be for those companies that are already high growth companies, or already in a position where they're probably a little bit more advanced. But there isn't really that opportunity for other startups that could possibly be successful, maybe who haven't had the 250 investment in the last 5 years, but maybe they've had smaller amounts, or maybe they've generated revenue. So that leaves them out of the gap. So Philip, what would you say about that?
I mean, the original plan, so there were different plans going around, I suppose, and it wasn't the only kind of idea posited by different groups wasn't just to have a co-investment fund. It was to have just a pot of money that you could give out, that could be given out by the British Business Bank, or another kind of proxy, I suppose, maybe a private fund that was just acting on behalf of the government with no fees. There were different models, and in the end they went for this. I think it's kind of understandable in a way as to why this won out, because it's kind of less kind of costly. It's also less kind of due diligence in a way for the government, because they're not going to get so many applications, because it requires first people trying to find another investment. Another thing I'd say is that the amount is probably higher than most people think, and I know that Henry's written about this on the Bohurst blog as well, that I think people are looking for something more like 100,000 match fund, and even maybe less also in terms of what's been previously raised, in order to just open up to more companies. And I think it's fair to say that the details haven't been set in stone as of yet, so something like that could change. We've seen changes in every other government announcement so far, so there's no reason why it wouldn't change. But as you say, this does leave people, kind of startups, early stage startups, without access to this. And I think, unless it's changed, then I don't think there'll be another. I don't know for sure, obviously, but I'm not sure there'll be another kind of equity instrument for them. It might be that the civils needs to be fixed, or there could be, if you're looking at really early stage, or like where the grant system that you get at the moment through business rates, that could be opened up, for example, to kind of proper kind of startups that are like in co-working spaces and other areas. So I don't think this is the only kind of show in town necessarily for future changes to support kind of smaller startups, but I think they could certainly kind of improve the terms that they're currently offering. And as I said, I think Henry's kind of articulated that really well in a blog, which I'm sure he could kind of talk about. But but I kind of agree with that. I think on the margin we can improve this.
Okay, so Henry, please do share your insights into that.
I think overall there's two ways of looking at this fund. I don't think it's a bad idea, and in fact it's quite similar to what Scotland's had for a while. This is in essence the same as the Scottish Investment Bank's model of taking stakes in promising businesses, and it could be a nice way to fund businesses and do pretty well for the UK taxpayer as well. So it's sort of not bad from that point of view. If you are trying to view it as the solution for all high growth companies, particularly startups, but also scale-ups who aren't eligible for civils, it's not enough. It does one particular thing, which is fix deficiencies in the VC and possibly the private market, awaiting clarification on the tax reliefs. But it fixes a problem in the VC market. So it sort of ensures that the economic uncertainty that's causing that to not function is sort of better oiled. And for that purpose, it does pretty well, actually. But there are a huge number of companies, as Philip's been alluding to, that fall outside the scope of that. So of the 30,000 we've identified over the period of 10 years as sort of being the high growth ecosystem in the UK, only about 7,500 at all would be eligible for this current scheme.
Right.
If we lowered the threshold to £100,000 of previous funding, that increases that by another 3,000 companies. So it's definitely worth doing, and gets us close to it sort of being a third of companies that are helped by this. But there are still a number that fall outside the range of that. But that's, as Philip was alluding to, it's not going to be one. There's no one silver bullet to. Although I don't know if you want to try and help companies with a bullet, but there's no one silver bullet to solve the problem here. And some of the companies we look at are actually eligible for CBILS. So that program is helping, although there are problems in rolling it out. It is partly the right idea. The furloughing scheme is useful for some companies, has its problems sort of fundamentally in that people are being paid to not be productive. So there are some issues there. We think there should be more incentives to retain people in productive employment. There are VAT payment holidays, which are very useful, particularly if you're sort of teetering on the cusp between being a loss-making equity-backed company and moving into profitability, where you might be able to look at some of the loan schemes. Those things are pretty important. So we're awaiting clarification from HMRC to see how those payment holidays interact with the R&D tax credits you would have got. And R&D tax credits are another great vehicle. They're already an incredible boon for companies prior to coronavirus. So we think that could be a really interesting vehicle to shore up those companies. On the premise that those companies have already been subsidized by the UK taxpayer, there's a massive incentive to make sure that that doesn't become sort of lost, that all of the money we've invested as taxpayers in those companies doesn't get lost. Obviously, there is the sort of sunk costs conundrum there. But there should be something we can do through that vehicle as well.
Okay, great. So, I mean, hopefully we'll see, we haven't received clarity yet, but as you say, there are companies that are left out of this fund that could well do with it. And I don't know, what the government's appetite is going to be to sort of review this and perhaps look at including others. But when we look at CBILS and we look at what's happened so far, a lot of companies complaining about how it works, the process, banks themselves being very new to it and not understanding the process. So it hasn't gone as smoothly as it should. Others are saying they've been rejected for silly reasons, getting personal guarantees, etc. But then when you look at sort of the CBILS loan scheme, we're looking at high interest rates. So a lot of people, are they actually even going to be able to pay them back eventually? But when you compare that to the future fund, there are some benefits to that because you're obviously getting a loan, which then is matched by somebody else, but then there isn't any need to pay that back unless you go for a future round of funding, or it can be converted to equity. So there are advantages and benefits to that. Now, there is small print, which I did find today on this future fund, which kind of worried me a little bit because there are things around the valuation cap, the interest rate, the decision-making and the warranties and all the other things, transfers. So what should companies be thinking? Obviously, we don't know the details, so maybe I'm just sort of stabbing in the dark here, but is there, in your mind, are there things that come to your mind that a fund like this that people should be wary of or concerned about? So things that we didn't understand about CBILS when it was first introduced, if it was clearer, then people probably wouldn't have had to spend, days and weeks trying to kind of go for that application and then realize actually they're only going to be rejected. We don't have any of that information. Everything is sort of led by time because everyone's short on time. Are there any things that people should be wary of this particular fund or should to look out for or to think about before they jump into an application, Henry?
Certainly. I think to limit it to one that I would really flag is the fact that the government can sell on this debt. So you don't necessarily know who will be on your cap table when it converts unless you take the option to pay the punitive 2x penalty to repay it. And that's a bit of an issue. We sort of get why it's in there. That sort of flexibility for the government makes sense, that they may change their mind about wanting to manage a portfolio of small holdings in small companies. It makes sense from that point of view, but it is a risk for the company taking on this debt that you could end up with an unknown fund on your cap table. Obviously, the VCs involved have been very pro this, and as far as the government portion is concerned, they don't mind it converting to equity because that equity is likely to just follow their input and their decisions. So in effect, they get a larger stake or a larger stake with input without paying for it. So there's a lot of it that makes sense from the fund side, but I think you need to be wary of as a company. But obviously, all of this goes with the caveat that it may be better to have an unknown investor on your cap table than to go bust.
Yes, no, absolutely. It's an interesting question, actually, just relevant to this. I mean, 5 votes to ask that question, so I'm just going to ask it while we're on this subject. So does the match funding have to be new funding, or can you just use old funding? I'm assuming it's new funding. Yeah. I mean, you can't use funding that you've already had. So yeah, so I think that's the answer to that one, unless anybody
I think there was a technical question around converting existing debt to equity and whether you could count that. Again, I would say probably no, but that is a slightly different question.
Okay. So we've got lots of questions, and I'm mindful to actually go to the questions rather than continue my side, because it would probably be a bit more engaging for those who are asking them. So the next question we've got is, will the total amount of government loan as well as third-party monies be treated as a convertible loan, or will the third-party investor be expected to take an equity stake on day one? Anybody?
I think it's the same instrument. I don't think it's converting at the same time. Sorry, I think they are converting at the same time further down the line. I don't think it's that there's an equity and then a convertible. But Philip, do you know?
Yeah, I think that's the case. I think it has to be on the same terms as well. But yeah, I wouldn't invest on the back of my that particular piece of advice from myself, because yeah, I haven't looked at that actually.
Seeing as the government's preference is for this to mainly be an equity instrument, so it's a convertible for convenience. If the other investor was getting their equity stake at that point, it would make most sense for the government to just take the equity stake at the same time. But it's for the sake of avoiding things around valuation, because you don't want anyone sort of being gouged on that when times are tough.
Okay, great, thank you. So given that the government relief package for startups only kicks in if you can secure more funding, is this really enough, particularly for companies that aren't looking to fundraise?
Probably no. I think alluding to our earlier comments, probably no. There was also the announcement of £750 million via Innovate UK, which will address some of the companies Philip and I have been talking about. Admittedly, it looks mostly like that is existing monies through already allocated to Innovate UK, but the details will be around how that's going to be allocated faster and probably to slightly different purposes and ends. Certainly when we look at our data, an interesting cohort of the ones that aren't supported by the Future Fund or CBILS are the ones that have been funded by grants to date, whether that's Innovate UK or EU Horizon 2020 programs. There are about 2,500 companies with probably the most promising IP in the country that aren't served by any of the current programs. But we're expecting that the Innovate UK package will be targeting them pretty directly.
So can we talk about that?
Just saying, that's quite significant as well. So I think any company owners who've got money through Innovate UK, I suppose that on the face of it looks like the most kind of promising option, but obviously that leaves out quite a few. I think on going back to kind of the CBILS issue, so looking at what could be done, I think it's fair to say that that's not working properly at the moment from company perspective, probably not from anyone's perspective, British Business Bank either. So I think there's definitely room for changes there, and they've already obviously made changes by putting in new providers as well. So it could be done. I mean, if you look at what's happening so at the moment there's issues around state aid, and I think like always the UK government is kind of being much more kind of compliant than other countries. If you look at the various applications that have been made to the Commission from other countries, including the German one, which feels like it's going a lot further than the UK, they have accepted it. And so I think there might be kind of room for manoeuvre there. If you look at the Swiss solution, which is slightly different, that's backed 100% by the government. I'm not sure whether that's possible in the UK, Switzerland being slightly different in terms of number of companies and the wealth of the country as well, but there's potential for at least things being opened up a little bit on that front. And given that they've already played around with it, and given it's the instrument feels like it's a bigger deal, I suppose, than the future fund in many ways. It's supposed to address a wider constituent of companies. I think that might be the one where that kind of concern as raised in the question might be dealt with.
Okay, and in terms of Innovate UK, so I did see, I mean, obviously my focus was around the Future Fund, but there was something around the Innovate UK and grant funding becoming available as well. Are you able to share any more information about that?
I don't think much more is not in the public domain. If you're saying that Innovate UK does use a team of sort of portfolio managers, so that they'll be aware of their companies who don't have any kind of external financing support, so that they will be looking directly at them, which is why I anticipate it will be towards those kinds of companies that the support is directed.
Within the statement, there's a suggestion that I think it's 175 million of support will be for firms not currently supported by Innovate UK. So there will hopefully be money. I mean, it's very early days, so I don't think they literally haven't decided exactly how it's going to work yet. But it looks like they at least in the press release, they've said some of it will be for people who haven't claimed before. I expect you'd need to be, and it'd have to feel like a kind of knowledge-intensive company, the kind of thing that Innovate UK would normally fund in order to access it. But I don't, those details aren't worked out yet.
Yeah, no, it's early days, but I just wanted to put it out there in case you guys are so knowledgeable and so much about data that I thought I'd ask the question. So the other question we've got is about what can companies really be doing to be in with a chance of securing the future fund. And I guess it's really sort of the simple things is you've got to prepare and make sure that you know what it is that you're looking for and put your value proposition out there and start looking for private investors first, because
it should, in theory, be not too dissimilar to the process of fundraising before.
I dropped out.
What the aim is.
Can you hear me?
I think we can hear. Yes, I'm sure. Maybe I'll talk over the top.
That's all right. We can hear you, Asma. Henry, if you want to jump on, I think you should be okay now, Asma.
Sure. Great. Thanks. We have lost Asma.
It's us.
So it should function somewhat like it did before. So the whole point of the intervention is to give private investors the courage and de-risk some of their investment through having government money alongside, so that they start to invest in something like the way they were prior to all of this. So the requirements remain the same in terms of getting a private investor. It's just they will be more ready to invest than if they didn't have the extra security of the extra government money.
And I guess just to add to that, at the moment there's a specific pot of money, and that will presumably, if there's appetite for it, will run out. So you'd want to be in there early. There is a sense that I get, which definitely don't kind of back, that if they do get to the limit, that they'll then increase the fund because it will show that it's at least being successful at what it's doing. And I'd be surprised if they didn't do it at that point. But I would think that timing would be important on this, because if you don't want to take the risk of it running out and you not being able to access it, if you do see it within your business interest to access it. I mean, I should add to that some people don't think it is within their business interest to do this, and I've had emails from entrepreneurs saying that they're not going to go for this. Obviously, their choice isn't between going bust and accessing this finance, but it is between that they were looking at it as a potential for how to kind of keep their business going, or how to raise new money, and they'll be looking at doing it in other ways, or maybe cutting costs. So I wouldn't say that it's definitely not free money. It's not like one of the grants or one of the more generous things like the furlough scheme, which seem much more of a kind of no-brainer, I suppose, for a lot of businesses.
Yeah, that's super helpful. Thanks, guys. I guess almost a sub question of that is, if you are looking to get some funding, does it have to be from an independent third party, or could, say, a chairman invest and then have that matched?
I'm not sure of the rules around that. I guess it might be a matter of structuring, or it might be a matter of whether it's kind of plays by the rules. So they haven't, within the guidelines, they don't talk about that specific aspect. And there's other issues around whether kind of other kind of things like previous convertible loans or advanced subscription funds and simple agreements for future equity can count. And I don't know the answer to these. I'm kind of making it not being very helpful, but basically there's a lack of clarity so far for people, for at least what we're hearing back as to what exactly will count. I don't know if you have a better view on that, Henry.
No, I don't. That's a really, really interesting question around the what fully counts as external funds there. It's certainly one worth digging into further.
And I guess the bigger question there is around EIS and whether EIS will be, I think that's not been asked, but it's what we're hearing a lot is will EIS be kind of counted under this? And there again, the answer is people aren't sure at the moment. I think, and that's very much a kind of 50-50 as to whether it will be possible to do that. I don't know whether you've got anything to add to that, Henry, or on the EIS front, if you've heard anything.
We've not heard anything, but our hunch is probably that it is meant to include that. There are some technical difficulties around it being a convertible, but I'm given to understand that that's more to do with HMRC guidance. So if they can convert, some convertibles can be EIS eligible depending on when they convert. Again, is my understanding. I'm not a tax expert. And I think there's guidance around a long stop date for that is around 6 months. If that is changed either in general or waived for this scheme, it should be possible. So it's sort of quite an easy change to make technically, is my understanding. And because the EIS is a great scheme in normal times, you sort of want to double down on that, encouraging investment flows. So it would make sense for the government to allow that. Obviously, there's a huge caveat. There's lots of things that would make sense for the government to do, doesn't mean they necessarily do.
Thank you. So apologies. I don't know. I've got to use a colleague's computer to come back. I don't know if you can hear me, but
yes.
Okay, a few more questions, and people are asking a little bit about sort of other than funding. What can companies do to survive and thrive in this environment? And I guess it's probably, around, not all companies want to have fundraising. Not all companies need financial help. But what can they do in terms of, they're operational? What could they be doing to continue to generate revenue? Or strategies in terms of being able to pivot the business that they have? So anything that you've seen in, amongst your sort of networks that you've seen that's working for people, any sort of tips around that?
I mean, there's very specific instances, I suppose, of, bars turning into kind of cocktail delivery businesses and all these kind of pivots you can have in terms of, or events companies suddenly setting up as and doing these things virtually. And I think it's kind of, I suppose, knowing what to do in some senses or what could be done is not necessarily the challenge. It's the challenge of actually physically doing that and pivoting. And I think the longer you have done business a certain way, the harder that is. And that's the kind of impression that I've got from kind of speaking to lots of business owners in different stages. I think once it gets to a certain point and you've built a business a certain way, it's a bit like the kind of Kodak analogy where they kind of knew that digital cameras were happening, but they physically couldn't pivot their business towards it, even though they had the IP around it, and it just wasn't a possibility for them to manage that change. So, I mean, I'm not one to give advice, to be honest, because it's everyone's got their own challenges of running businesses. But I guess the adaptability thing is critical, and just taking stock and realizing what's going to happen. I guess one of the challenges there, going back to previously, is the things we've talked about is knowing how different things are actually going to be at the other end of it, and that's really that could be a kind of timescale thing as well. So it might be that some, by the time that things are more back to normal, that the kind of economy's changed in a fundamental way. And if that's happened, then I think if that does happen, then the government is going to have to let more businesses go under than they would otherwise, because the whole premise behind this is freeze the economy, keep people in jobs, kind of flatten the curve, open up the economy, everything goes back to normal, but we've learned something in the process. And I think that's the right strategy, 100%. But if it goes on for longer and has actually fundamental changes in the way that people live and work and buy things, then that requires people to move capital into more efficient uses, and that requires people to change their business model. It requires some degree of bankruptcy, I suppose, or business models that don't work anymore, and it requires new investment in new ideas. So, and I don't think we're on that latter point yet, but I think we're more on the former point of let's keep things in check and make sure things are back to normal at the end of it. So I think the ability to adapt is obviously the critical skill at this time.
Okay, great. That's a very helpful answer, actually. But I'm just going on. I think a lot of people are obviously sceptical about this fund and asking questions around it and whether it's the right allocation of funds by the government at this particular time. But I think they're obviously minimising and reducing their risk by asking for co-investment anyway for private investors who will probably undertake the due diligence. But Henry, do you have any sort of thoughts on that? Whether the allocating this accurately, and is it the right use of funds? And I guess this is sort of coming from taxpayer money. I don't know.
Yeah, so this gets to a broader sort of political economic conversation of what the government is in this kind of crisis, and generally, if the pool is unlimited, then it makes sense that you should do everything you can. And given the amounts that are being talked about, it feels like the pool is unlimited, although that's not sort of necessarily true. With all of these things, it's one thing to commit to a scheme of a certain size, but you don't actually know what extent of that will be drawn down in either it being less or more, as it looks like some of the schemes may end up falling into. So there is a sort of you may have decisions being made around, if we have X number of billions to throw in support. There is a question of, are you throwing it at the right thing? And the view has clearly been taken around this fund is that it's actually quite a cheap way to reignite the private funding market and long-term upside to the taxpayer. That's sort of how it's been designed as a low-cost intervention with potentially some quite big upside with the equity stakes that the government ends up holding. So I think it's worth doing if it doesn't then mean that there's no money left to go to the other institutions Philip and I have mentioned.
So I guess from there, then what's being asked is that the loan is for a maximum of 3 years. But what happens in the situation? And I guess probably we'll see the criteria come out anyway in sort of coming days and weeks. But what if people can't pay the loan back within 3 years, or they haven't secured the next round of funding? Are they going to have to pay back double the loan at that stage? I mean, I've seen interest rates of 8% right now, but then I've also seen in some information that they're saying that it will be twice as much as the loan money was at the start of the funding.
So it's both, actually. You have to pay the interest and the principal twice over. So it is deliberately designed as a penalty. That is because it is designed to be an equity instrument. So that, again, the reason it's convertible is to deal with some of the practicalities now, so you don't have to set a valuation now and things like that. It is intended that it will convert to equity, so you're not really, the government doesn't really want you to pay that penalty, in essence, back to this fund. So the government's getting the interest and then your equity stake as well. That's the upside for the government.
Okay, now so that's and Philip, do you have anything further on that? Or?
Yeah, I'd say in terms of value for money, I think that's I think it's quite. I think the government's kind of set that up so that it's pretty good value for money in terms of the scheme in and of itself. Just looking through some of the questions, I mean, will people move country? I'd say because they won't benefit from it now. Moving to another country, I don't think that they would now. I suppose there might be, depending on how different countries manage this, we might see the ecosystem of another city or country. When by city, I kind of mean London, or I suppose principally, but you could say like Manchester as well, and Cambridge and other kind of tech hubs. If the UK government doesn't manage it particularly well, then you could see people moving afterwards, particularly European founders, many of which are kind of running the fastest growing companies in the UK. You could see them potentially think, actually, Germany was better at this time, or France was better at this time at looking after us, and it could be the kind of marginal decision to kind of push people to relocate. But I don't think your average startup's going to relocate off the back of this, because that's not enough of a reason to do it. You need other reasons as well, I suppose.
No, but both of those are investors in the last couple of days. I mean, foreign investors particularly. I mean, I don't know what it is about investors, but they like government-backed schemes that's associated with government, and they've kind of been a bit more welcoming and liking this whole, initiative that's come out. And I've seen people say that, if we can see that there are companies that the government will back, then we will obviously invest in those companies, obviously provided that they're passionate about the product or they like the company that they've got. So I've seen a general tone in investors. I think if I found a company that I felt, had something to offer, or was dealing with an impact as a result of this COVID, or was doing something different, then I would probably jump to want to co-invest with the government as well. So I think it's a welcome initiative overall. I can see there are issues around it, there are gaps and there are concerns, but then that comes with every investment. You see it with VCs, you see it with other sort of equity houses, you see it with other private investors. People have their own kind of terms and conditions, and there are difficulties. So, if you're going to get money at a time like this, and I think there's less scrutiny in terms of what the due diligence is required by the government. The investor sometimes has its own, but I just feel it's a welcome opportunity. So there are more questions around the future fund, but again, I think we've got limited information as to what the criteria might look like. So somebody's asking about the criteria. So I think we'll probably need to wait and see, and we've probably given as much as we can in this particular session, I believe. So then another one on Sybil's, and again, back. Oh, it's disappeared. Where's it gone? Oh. So if you're not looking for 250k equity funding through government, and the other investor are CIBS, the best alternative, or are there other sources of funding?
Unless you can get, obviously there's business rate grants and things like that. I'd say Sybil's is probably the most, would be the most obvious. But there you have to have been, this is not kind of the case for a lot of high growth startups, is that even though they have kind of profitable product lines of some sort, they were still running a loss at the end of the year. So they're being rejected by their banks. But as I say, there might be changes to that potentially, and those sorts of businesses might be at some point. So that could be, I think that would be more likely to be an option. But yeah, I'd say, Sybil is a loan, so it's just whether, that's another business decision as to whether it's the right thing to take on a loan at that, at this point. It's not something any kind of decision you should take lightly, I suppose.
I know, great. So I think we're coming sort of to the end of our session. It's gone really quickly. But before we kind of finish and sum up, I think we ought to really say something about failure as well, because we've talked about all the positive things and, what companies could be doing, how they could be changing the scene on the investment side, sort of pivoting your business. But realistically speaking, times like this, there will be companies that crash. There will be those that go bust and maybe won't make it. What can they do? I mean, surely there are things that they could be doing. So as an example, someone who's really talented, was probably in a startup and maybe can't continue and has to shut up shop now, could they become a co-founder in another company? I mean, what other things do you think that people should think about at times like this, where you're looking at failing companies?
Yeah.
Henry?
There you go.
I would say on the I guess some of the dynamics we're seeing in the fundraising market are sort of mirrored there. In that there are opportunities to be had. Companies need money now more than before. And again, one of our criticisms of the furloughing scheme is companies need productive employees now more than before. If your current business has gone under, basically your price slightly drops. If you need to be doing something, you can offer yourself more competitively to other companies who might be thriving. And there are those out there, as I sort of said at the top of this. There are companies that are doing well, and there are still companies that are hiring. But they'll know that they hold anyone hiring now holds a lot of power in that conversation. So the dynamics there will have shifted. But if you're sort of willing, particularly if you're looking very early stage, if you're willing to offer up more than you would ordinarily, whether that's asking for less pay or whether you're just more committed to what you're looking to do, there are opportunities there. But
It's great. I think it's just been creative, isn't it? Trying to find can actually survive through this period and then come through it, and then perhaps look at the options available once we've got of it. And just final question, Philip, for you. I read an article that you wrote somewhere about revolutionising the relationship between the government and the entrepreneur or the startup. And I just really wanted to explore what you meant by that, and where you're going with that, and how that can happen.
Well, I guess, I mean, just before this kind of kicked off, I was in Estonia, for example, and I've been into a few countries to see how things are done differently. And I think there's, the model of how entrepreneurs and government interact in the UK is kind of pretty old-fashioned and kind of ripe for disruption. And I suppose we're probably seeing some of that now, actually, when you look at all of the HMRC's interactions now. Suddenly you can do lots of things online that you couldn't do previously because of things like furlough. So I guess the thing that we'd like to see in the medium to long term, it's obviously not the time for government to be thinking about this stuff necessarily right now, is looking at models for how government and business can have a much better relationship in terms of the way that people pay taxes, the way that, for example, a lot of the problems I'll give you an example, like company directors who pay themselves in dividends, obviously losing out currently with the current system because they can't kind of separate, the HMRC can't properly separate dividends that are paid through wages as through investments. So because of that, government can't properly target them with the kind of support that they would presumably target otherwise. So we just don't have the data. It doesn't connect up. Everyone that's dealt with any kind of function of government realizes how frustrating it can be. So I think a lot of just putting everything online, having systems which interact, so that, for example, there was a rule that was introduced in Estonia, which meant that as a business owner, you only had to give information to one department. And if then another department asked for information, as long as that information was shared, so for example, your name or address, then they would have to take it from them. They couldn't ask you. And just doing that meant that all the departments started sharing that data that they're allowed to share. And all this sits on blockchain technology, and it's been like the Russians have tried to hack it and everything. So it's very kind of secure. It's much safer than the current systems we have in place in the UK. So these are the kind of ideas. I think it's definitely not top of mind of everyone, anyone here, but it's critical, I think, and it's the future of the state.
No, absolutely. And I think anything that sort of revolutionizes the relationship with government and the way business is done in the UK, and to encourage and support that, is always welcome. So just some summary, sort of final words from both of you, please, just to close off today, in terms of first listen to any of your top tips from today.
I think overall I would round up as saying that the Future Fund is interesting. It will serve a function. It is not going to help every single high growth company in the UK. There are other schemes, some of them already working, and we hope to see more, particularly around the really IP intensive but very early stage pre-revenue companies.
Absolutely. I mean, I would echo that. I'd say that the Future Fund serve its purpose. I'd say it's not the final iteration of either the Future Fund or any of the other schemes. So I think you'll see changes to this and changes to the other schemes. So I think it's definitely worth kind of keeping an eye out on as to what's happening and how that will impact your business. And probably it's quite hard to follow everything. I mean, we try our best, but maybe having a group of other business owners or following the major announcements and not getting too much into the into kind of people, like getting trusted sources, I suppose, and finding hubs where the British Business Bank or the government is kind of putting out information and using that as sources, because there's so many kind of rumours that go around these things, and misinformation, and means to people kind of making mistakes, I suppose. So for example, the furlough scheme, it's possible when you're applying for that to apply too much in advance and then lose your flexibility going forward. And that's an example where I think that most business owners don't realise that, and there's a few of these things that can trip people up. So just do your due diligence.
Fantastic. Thank you both so much. I mean, you've provided some valuable insights today, and you're doing amazing work. So I really appreciate you attending, and I'm sure everyone who's listening will have obviously taken a lot away from today. So thank you. And